Hello traders, Damien here. Welcome to a Q&A session. Our friend Derp here wrote a post earlier last week that I was going to make a video on, but this one is pretty much along the same line, so I'm just going to completely ignore your first post, Derp. Not just kidding, but I am going to address this one and go into greater detail. Again, this is another question about order flow, about prevailing order flow, about short-term order flow versus long-term order flow. There seems to be some slight, I guess, confusion, I should say, about order flows and how one turns into another, or what is the proper order flow. So I'm going to make an emphasis on in the live streams to specifically be critical about the order flow, so you guys are able to follow along in real time and ask the questions in real time. But I'm also going to put some diligence on making that structure analysis and order flow video, that we can just strictly speak about those two topics and how we use them together, and how we can use the order flows to help us with the structure expectation. All of those things that we do on a daily basis, that you see me do routinely, I'm going to go ahead and make a special lesson on that alone, and spend as much time as we need to on that, because it really is important. It's important so that you can understand what it is that you're trading, right? What is the first thing that I tell you guys? What are the goals of your trade? What are you trading? Are you trading a pattern? Then that's what you need to concern yourself with. Are you trading a expectation failure? Are you did the market change directions and you're trading in a different directions? You cannot know those things unless you are on point with where your main swing is and where that main swing fails. Okay, so that's super important. But let's get into the question, then we'll dive into the chart, and then we'll speak a little bit about the rotations, and that may be a source of also a little bit of confusion for some people. Again, and remember, my goal is not to get you to trade like me. My goal is to get you to read the chart with accuracy. I just show you how I take the information of how to read the chart with accuracy and incorporate it into decision making. So I am showing you how to read the chart with more accuracy, with more consistency, but I'm also showing you how I apply those skills so you can have a real world example of that, and you can incorporate the skills that I'm teaching you into any system you want. Okay, just because I use rotation doesn't mean you have to, but what you do need to have is some sort of an entry trigger, a trigger that puts you, that's the period at the end of the sentence to get you into that trade right after you've built your case. And you need to be able to recognize that trigger in real time, so when it happens, all you have to do is just without hesitation pull that trigger and manage your trade per your rules. Okay, but we'll get into all that. Okay, let's first see what our good friend Derp here wrote. I see he's a new member. He only has 9 posts, so I don't know if he's a longer term trader that's just has some other skills and disciplines, and he's just trying to use these, or whether he's new to trading altogether. It doesn't really matter either way. I think I sometimes rather work with newer traders that don't have experience, because then we don't have a bunch of bad habits that we have to try to get you out of. But here we go. Hey Mr. Pip, I am practicing swings, but the struggle is real. I took your advice of sticking with one order flow and ignoring the rest. Could you explain to me how you would trade this expectation, question mark? In terms of my thought process, I was trading the yellow line order flow, but the second yellow line gets stopped out because of the blue line's order flow. So I guess this one, he says, gets stopped out because of the blue line's order flow. Okay. All right, and then it says, and then he goes on to say, I think I am struggling with rotation candles, because as per your rules it should not trade significantly below the previous candle. Also holds half of his volume. Okay, blah 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 blah. Okay, no problem, Derp. We're gonna take this chart into account here. And now what do we see? Processing this chart, number one, there's a couple of issues that I have. I'm not sure where all these fibs are. You don't have a fib on this swing, which with the information that we have, we see that price came here, made a complex correction, attempted to break lower here, and made what appears to be a new structure high. Okay, so based on the information that we have, this is a new structure high. Okay, and this is a higher low. Okay, and then price comes down and makes a new structure low. Okay, so let's just pretend for all intents and purposes, what do we have here? We don't know exactly what we have here other than a high. Well, is it a new structure high? Is it the beginning of time? Okay, from this situation, let's just assume that it's the beginning of time, right? That the market just started here and it made a high and a higher high here. So this is a new structure high, and we had a new structure low, expectation failure, whatever you want to call it, it doesn't matter. Okay, but here we have a clear high and a clear low. This is a main swing on the yellow. Okay, now this is where I may have an issue. I'm not sure that this is a proper correction. Why? Because you did not draw a swing on the right swing. You drew a bunch of fibs here, but none of them where you needed to here. You drew a fib from here to here. I don't know if there's a proper swing to know whether this is a main swing that had a proper correction and then another new structure low and then a expectation failure here. Okay, or price just simply came here, did not have a proper correction, and then rolled over again, and then there is no yellow swings. These are just shorter term price action that just happened to be part of the chart. Remember, price does not move in a straight line. So because I don't know, and I'm not exactly sure whether this reaches a 38%, okay, I don't know that this is a proper swing for you to identify this and this. But let's play devil's advocate here. Let's say that this achieved a proper correction and that this achieved a new structure low, right? Off of a very weak projection, and we have a one-to-one to the downside. Okay, so trading this one-to-one to the downside, if you would have gotten long anywhere down here on the completion, your break even is the 38% of the overall high and low here, and your take profit is the 618, which looks like this move to the upside achieved very nicely. All right, so here's the thing. Okay, what are you trading? What order flow are you looking at? If this made a proper correction and this made a proper new structure low, okay, and you traded the D, okay, you entered D long, okay, on the expectation of a deeper correction because you have a harmonic pattern completion, then you wouldn't be looking for shorts anywhere in this area, and you wouldn't be looking for shorts here. So now you're not trading the order flow, you're trading the pattern. Okay, and this pattern profit target completes somewhere in this area. Okay, so now you have two questions to answer. Okay, you're looking now for an overall higher low on the patterns order flow, right? You just said you were following the yellow one. You had an expectation failure, very weak new structure high overall. You would expect what? At the very least, you would expect a deep correction. You also have an ABC D correction here, completion here, where the second leg extended slightly longer than the first one, giving you a completion point here and a nice rotation to the downside. We'll speak about rotation shortly. Okay, but now what are you looking for? Okay, you're telling yourself that this achieved a blue order flow deeper correction. Okay, that may or may not be the case because we don't know this. We also know that if we were to play devil's advocate and we have a proper formatted order flow here and we have an expectation for that, we're looking for longs. But what is our basic expectation here? Okay, well, overall, okay, maybe in a slightly longer term, the market is expected to make new lows, right? But in the shorter term, in the intraday order flow that you're trading, the market made a very weak new structure high. So how can you play this? Well, you can play both sides without even having to figure it out or having to overly complicate your position here. Okay, what is our expectation and the rules? And that's why the rules are like this, and harmonically, this is the beauty of our system here, is that, okay, what is our basic expectation from an expectation failure weak new structure high? A deep correction, right? So if you expect at the very least a deep correction, isn't this a safe entry? Okay, especially when you have all these harmonic situations completing. What harmonic situations, you may ask? Very simple. You had an ABCD completion whose long entry was somewhere in this area, whose profit target is in this area. You also have a longer term bearish order flow which may resume here. Okay, now you can enter short here. Okay, you do also have what? A 1-to-1 to the downside here, which means what? You can enter in the D entry here, which is also an aggressive C sell, confluence, 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 and then look to get to a break even at the 38% if you're trading this little pattern here and looking to get aggressive at the 618 and start locking in profit or trailing since you traded this pattern. That's why I asked you, what are you trading? Okay, there's no reason why you can't get short here, and instead of getting to the break even at 38%, giving your trade little room to materialize when you're expecting a possibility of the market rolling over and continuing to the downside, you know, instead of getting aggressive at the 618, what you can do is you can get to the break even at the 618. Now you have a risk-free trade, okay, and you may give some money back if this market does roll over, but at the very least you didn't lose anything and you gave yourself a way or an option to compete for the longer term. You guys also see me do that quite often, you know, where I take the D entry here, which is also an aggressive C sell. You know, those are those patterns within patterns that I talk about. And instead of getting to the break even at the 38%, which is what would be the issue here, getting, you know, trading this complex correction here, AB equals CD to the upside here, you can tell yourself, okay, you know, I'm going to think about reducing my risk, but I'm also going to put myself in a position to compete. So what's my goal? I'm not commingling order flows. I'm not, you know, I'm not using one to help me find the other, but what I am saying is I do understand what the market may be working towards, and that's price action all the way down here. Okay, I also understand the intraday order flow has made a weak new structure high, so I expect at the very least a deep correction. So a deep correction is tradable? Yes, it gives me room and opportunity in case the market does not find support at these areas down here or at structure down here and makes a new structure low. I'm already in a risk-free position and able to capitalize from that. Okay, because one of the things that I can do immediately is, you know, and your rules have to be clear on this, and your process should be consistent on this. You know, how do you handle these situations? What does your trade plan say to do? Okay, so you don't have to have a bunch of rules for when this situation happens or that situation happens. It's very simple. What are you trading? Okay, and that situational awareness gives you the eyes to understand, okay, I'm trading this, but the market is working towards this and I'm aligned with that. So you know what? Let me do the best of both worlds. One, eliminate the risk completely, okay, and see if the market can work towards what it wants to work towards, okay? So what are other options that you have here? Well, your options are getting to a break even at the 38%, because in short, you're trading this ABCD, you're expecting a deep correction, you're also expecting a shorter term new structure high because of the order flow here, and that may or may not happen, right? You know, in fact, you had a rotation here that could have been like, uh-oh, this is in the right area, we do have some buyers there. Okay, so you do have a nice rotation there. Okay, but that rotation, one candle shouldn't bully you in or out of a trade. It should get you in a trade when all the other parameters have been met. Okay, but we talked about what are your options here. Okay, so getting long here, taking profit here gives you now what? An opportunity to compete, right? Because you took profit up there, or your trail took you out. However you manage this, you probably had an out somewhere in this area, and you have a nice signal to get short here. Okay, so you could get short and get to a break even at the 38% of what you're trading here. Okay, but seeing that the market is maybe aligning itself with its overall expectation, okay, and I'm sorry, with what the market is working towards, and you have room to compete, okay, getting short here, your stop still has to go up there, but once you get to the 618 of the ABCD, which is the profit target of the pattern, you're not going to take profit, because at that point you want to give yourself room to compete. Okay, so what are your options? Okay, your options are simple. I'm trading the pattern. I don't give a crap about anything else. I'm getting to the break even at 38%, and I'm starting to trail the 618. If it gives me more, great. If it doesn't, that's what I'm trading. Okay, or this is what I'm trading, but I see that the market is realigning itself and trying to work towards, you know, making another low here. Okay, so what are my options? Okay, my options are very simple. I am not going to go to the break even at the 38% because I am not giving my trade room to move. So instead, once price gets to the 618 of the pattern, okay, and it's the profit target of the pattern for a reason, because most swings are going to find support in that general area, because there usually is pretty good structure at the 618 of most swings. Okay, it's just, that's why it's called the golden ratio. Okay, so instead of getting there and start trailing there and getting overly aggressive, being taken out prematurely to see, you know, a very nice trade that would have given me more, what you can do is at the 618, now you can get to that break even, lock in 5 or 10 points, you know, so you don't walk away completely empty-handed. Okay, and then once price tests those lows, okay, then you can then lock at the 618 of the pattern, and you achieve the best of everything, right? You traded the pattern, you were able to reduce risk, you were able to give the market more room. Now you locked in at the 618, guaranteeing yourself your original, what you were originally trading anyway, but then you gave yourself options to be able to get more because you saw what the market was working towards. So assuming that this was a proper correction, you did have a expectation failure here, and you should have been looking for longs. Okay, but if you were harmonically in tune with the market, you had you didn't really have a short opportunity here, but you did have a D entry here. Okay, and then you had that reached target. You also had a ABCD completing up here, which got you in the short here, with a very basic expectation of a deep correction. Gives you what? Room and opportunity to at the very least capture that, because you're expecting a deep correction. You have an ABCD. The ABCD's profit pattern is consistent with your initial basic expectation of a deep correction, okay, which you had a nice rotation there. Okay, and just so that you know, pretty much that 618 profit target is usually around that C area, A, B, C area is where that 618 of the pattern usually falls in. Okay, but that's just some general information for you. Okay, but you see how you know, having that situational awareness, understanding the order flows, understanding what the market is working towards, gives you opportunity to compete on both sides, and you're not discriminating one order flow over the other, but you're finding confluence within the order flows to help you trade in the direction that has the most strength possible. Okay, so that's the essence of harmonics. That's how we can use the order flows with each other. Okay, but what we don't do is, you know, oh, I'm going to get long here, and then I'm going to get short here because now we have realignment. No. Okay, you're getting short here because you have a pattern completing there. You're getting short there because it is a profit target of something. You're not getting short there because now the longer order flow, that's where I expected. So, but what are you trading? Are you trading the long order flow, or you're trading the small order flow? Because if you're doing that, what are you doing? You're discriminating trades. You're filtering out trades, and you're hurting the overall expectancy. Okay, super important to understand these things. Okay, this is about frequency, and it's about putting the odds in your favor. Okay, there's no reason why you can't trade both without discriminating one and the other. You're using them for confluence. You have basic expectations from what the order flow has achieved, and because of that, and knowing that, you're going to protect where you expect the higher low and new structure high. You don't necessarily have to take profit there or trail there and get yourself taken out prematurely when the market is working towards something on a larger scale. You can give yourself room to capture that, but at the very least, you have to protect your trade. You can't just now assume even greater risk than you had anticipated. Not that you had anticipated, but that you're taking on excess risk when what you should have done is, at the very least, protect your trade. Cover the basis for entry first. Cover the risk parameters of the trade that you're trading first. Okay, get that to a break even, and if you're in alignment or working towards alignments of something bigger, there's no reason why you shouldn't be able to give him more room if you want to, but protect yourself. Okay, don't strangle your trade if you're going for this blue order flow. Okay, don't strangle your trade if that's what you're going for. Okay, it's okay to start here. It's okay to use the confluence. It's understanding that you're still trading a D, you're still trading the parameters of the intraday order flow, but the market is telling you that it may be working towards something, towards another new structural low overall. Why not compete for that if you can? Okay, so you can amend or change, not amend, change your trade management, but don't change your trade. Don't change your entry on the premise of the order flow that you're trading, on what you see in front of you, but also with that situational awareness, you can amend your trade management to capture extended targets, because that's what you're doing here. You're still trading the same thing. There's nothing different than what you're trading. Okay, but you're understanding that you're getting short here. The market may be working towards something down here that's not your general expectation, but because the market is working towards that, you have the situational awareness. You can still participate here, and in the course of trying to capture this, you can achieve the goals of your immediate trade. You just have to give it a little more room. You have to be smart about it. You have to understand what you're trading, and you are giving your trade room to work towards extended targets. That's why I like to trail, and I don't like to take hard targets. Okay, but there is a big, and I'm going to say this in big fat words. Okay, don't freaking change your risk structure to accommodate a larger order flow when you're trading a different order flow. That does not work. Okay, what I mean by that is that if you, let's just say on a larger scale, let's say on the order flow that you're trading, let's just say that you're trading this, right? Let's just say, forget about everything else. You're trading here, you expect a higher low and then a new structure high. So you got the higher low here, you got the weak new structure high, you have a correction. Okay, what I'm saying by that is that if you are trading this, okay, and that is the order flow that you're trading, your stop goes here. Okay, now you can't possibly be looking for price to go all the way to hell 3,000 points, and and you're looking at this as one whole main swing, and your stop is still there because you didn't want to assume the risk. You can't morph your trade into something bigger, okay, and trading it with the intraday order flow risk. It just doesn't work that way. Okay, but can you manage your trade on the intraday order flow and still look towards, the management style or the trailing style is going to help you capture those extended targets? You see me do it all the time. Okay, in fact, I did in one of the live streams where my trade management changed to what the market was working towards harmonically on a larger scale, but I ended up being taken out anyway, but I was able to reduce the risk and lock in some points before that. So that's a takeaway here. That's how I would process this chart. This is how Harmonics would process this chart. Okay, don't get that tunnel vision and say, this failed. Okay, this might have failed, but is it a real failure? Is this a real proper correction? I don't know. It looks like it may be borderline. It looks like it might have. It also looks like it might not have. It's pretty close. Okay, but playing devil's advocate, if it was, yeah, you do have a 1-to-1 to the downside, and AB equals CD. You do have a good order flow there. You do have a failure on that order flow if this is a proper correction, but that doesn't mean that you can't get long here. You definitely wouldn't get short here. You definitely could get long here, and then there are technical reasons all over the place to look for short up here, right? Plus the market may be working towards something on a larger scale because it's showing you that it's had a proper correction off of a larger clear high and clear low. So it's achieved the 38% of this high and this low. So it definitely is working towards something else, and this achieved an overall low. So the market is telling us that it wants to head lower. Okay, but this is how you can use that information. Use the different order flows, position yourself in a way to compete, okay, and always give yourself an opportunity to shoot for those extended targets. That's not called greed. That's called improving your risk reward. But you cannot do that at the cost of incurring excess or extra risk. On the contrary, you can only turn that option on once you've reduced or eliminated risk. If the swing is large enough, lock in some points, on those ratios. What did we talk about that earlier? Yes, we did, right? We talked about, at that 618, once price tests those lows, you can lock in. Now you've achieved the profit target, or you've secured the profit target of what you were trading initially, but you're giving yourself an opportunity for what? Those extended targets. Those extended targets are the bonus, okay? The bonuses that are going to propel your account, even quicker than your regular risk reward, okay? I hope this lesson was clear. I hope that it had value and it answered your questions. Like I said, I'm going to be making a specific video on structural analysis and order flow analysis, combining the two for better clarity and a cleaner roadmap for price action. As far as the rotation, I almost forgot. Okay, you said how you're a little confused on the rotation. Now, sometimes you need to have this, do not trade higher than the previous one or lower than the previous one. That's just me, okay? But what is the purpose of the rotation? What does the rotation achieve? A rotation is nothing more than an entry signal or trigger to get me into the trade. Do I sometimes enter in the absence of rotation? Rarely, but I do. Sometimes I'm starting to use absorption from time to time as a method of entry. But what does the rotation achieve? Okay, the rotation achieves a visual confirmation that your party is showing up to the party, right? Because if you have price come up here to this specific area here, and then you have a candle that completely overwhelms, in this case is an engulfing one, but it's not always an engulfing one. Sometimes, like let's say I see here, like here, okay, let's just pick, I purposely discriminated here because I want you to see that this candle right here, okay, does achieve rotation, but it's kind of weak, right? But because I don't like the candle to trade below its open. This one did. I don't like the candle to trade below the previous candle, okay? It's close. This one did, okay? But the candle also held more than half of its overall volume and did take out almost half of the previous one. So this is a weak rotation, not a rotation that I would take, okay? But as you can see, when you compare and contrast here, what this candle represents from a selling standpoint to what this candle represents on a buying standpoint, there was a little more selling than I want to see in this candle, but it's a 180-degree shift from selling to buying, right? That's in essence what we're trying to see on the rotations, right? This one didn't achieve a good rotation, right? Although it did not trade below its open very much. It definitely didn't trade below the low of the previous candle. It holds half of its overall volume, but it does not take out half of the previous one, right? So this is just like an invitation to buy. This is just like, okay, this is an invitation. It's not even absorption. But notice when these signals are weak, meaning when we don't get exactly what we want, you usually just get some sporadic price action. It may materialize later, okay, but you want to see strength. You want to see violence, okay, and that violence gives you a visual cue that your party showing up to where you expected them to. That's a visual confirmation. So that trigger, whether for you is a rejection candle, a pin bar, a doji, some selling pressure like this, a bearish hammer, whatever it is that you want to use as your trigger, okay, it doesn't have to be what I use as a trigger, but the purpose of that trigger is so you get a visual representation that confirms to you, yes, your party is showing up. It is safe to pull the trigger, okay? Because that's going to also help you sometimes get better timing, okay? Because sometimes you're not going to get the rotation in the area that you expected, and price goes a little deeper than you expected, okay, and then gives you a beautiful trigger entry, improving the risk reward, right? And cutting down the time that you spent on the pain train, right? All very important factors. When you can improve risk reward be better timed on your entries, and spend less time, on the pain train, then those are all win-win for what? The emotional battle, right? So that's the essence of the pulling the trigger. Okay, could you technically just enter in your area of interest that has great risk reward blindly on the limit order? Yes, you can, because if your stop is in the right place, okay, you're going to probably survive and achieve the goals of that trade. Okay, but your timing may be off because you're entering on a limit order in an area that you're expecting to be defended. Okay, you may spend more time on the pain train because you're not waiting for that price action confirmation that's confirming that, hey, I want the sellers to come in and now I see they're coming in. Okay, to me, I'd rather have that to help me be more patient. Sometimes you're not going to get the perfect rotation, or you're not going to get the parameters that you're pulling the trigger must have to pull a trigger, and you end up not taking the trade and watching price move in favor without you. That happened to us a few times in the last couple of weeks. That would have been beautiful trades, but I also need to see what I need to see. Okay, I can't then get impatient on the next trade, and anything that looks like the sellers are coming in, I'm going to jump all over it. Could you trade that way and win? Yes. Are the probabilities going to be any more or less? No. If anything, they may even be better, because now you're taking trades almost 100% of the time in your area of interest, regardless of whether you get an entry trigger or not. Okay, that may screw up your timing, it may screw up your risk reward here and there, for better or for worse at times, but at least you're going to have more participation than you didn't get the rotation, so you didn't participate. So you have to do your own testing. You may even want to look at other triggers, whether it's a rotation, whether it's a doji, whether it's some selling pressure in a candle, or the candle's just getting smaller, indicating that, it's like when the candles are getting smaller here, we can see that these candles are in balance. These candles are in balance. As these candles get smaller, it's a more balanced mix of buying and selling. That's something that I love to see as prices coming into my area of interest, because it's telling me what? It means that the buyers are pouring in here, okay? And that the sellers are not, that when you see price coming up, this is a bad example, but when you see strong candles coming up, you would expect to see strong candles here, right? You wouldn't expect to see sellers down here, okay? Unless the market is very strong and unless they want to break through that area. You see small candles on the correction, guess what? That's a bunch of sellers piling in, balancing out those candles. What are they doing here? I don't want them there. That means that you're probably going to get a correction and not a significant move to the upside. So what you like to see is what you would expect to see, okay? Support, big candles, nice inversion of selling to buying the candles, and as price is getting into an area of interest where your expectation is a lower high here, then you would like to see the candles getting smaller into that area of interest, because as those candles are getting smaller, what is that representing? The sellers that are coming in, balancing out those candles. Where you expect them to. They're absorbing, they're coming in, okay? And then when you get that rotation, it should be the surrender, the lights out, the you're done, we're on to a new structure low again, okay? So again, in the live stream, I wrote a little note to speak more about the correction, okay? So we're going to spend some intimacy with the corrective process of these swings in the live stream, okay? We're also going to address the order flow and combining the order flows in more detail. And we're also going to be making, I say we, I don't know, I'm going to be making also a video about structure analysis and order flow, and the happy marriage that and how they help each other out, okay? It's a perfect union unless you lose situational awareness, and then it's like a bad marriage, okay? But other than that, I hope this video had lesson and value. It's a little late here, and I'll post this video out on Sunday. Thank you very much, and good trading, guys.